looking for the sports channel, Gary.
Alrighty, this video will be the weekly game plan. These will be stocks with good patterns and setups for the upcoming week. I'm going to be throwing out some potential entries, stops, and targets for these stocks. So if you missed last week, I really feel a little bit bad for you. You missed out on quite a few big runs and a lot of money, but that's okay. You're here right now, so let's try and make some more money this week. So last week we said the SPY, the SPY, the S&P 500 proxy. We said we were bullish on the SPY and we were just looking for this ascending triangle to pop. And look, it just popped. We gapped up over it, came and back tested the old all-time high, 364.34, and boom, it was off to the races. This is just typical trading. Breakout, back test the former breakout area, and pop. So this week we're a little bit neutral to SPY, but we are bullish tech. But let's talk about the trades from last week. Last week, we said to go long on Starbucks just over 99 and to add over 99.30. Well, Starbucks did exactly the deal. A $3 move, $4 move for Starbucks is a huge deal. I mean, you know, 3-4% on a large cap like this is a really big deal. And boy, were we ready for it. We had the nice move up, sideways consolidation, even putting in higher low pivots from the previous low. Oh boy, Starbucks was just begging to be traded. So if you missed Starbucks, there'll be more opportunities in the future. But I'm sticking with Starbucks just with a few debit spreads, so ride it if you're bullish. Similar to Starbucks last week, we saw Google is in this nice good flag formation. We were consolidating and we're coming up over 1800 and we got a little bit of an increase in volume, but the breakout hasn't been super explosive yet, but we have been able to get some really good moves out of Google. Over $43. We took a few partials at 1830 on Weenie Trades Live, but Google, I'm still sticking this one. It's just back testing the old all-time high, just like the SPY, and looking to go higher. So I'm sticking with Google. Not in this week's game plan officially, but sticking with it if you're long. It's a little bit late if you're not. If you're buying up here, you gotta really be sure to place your stop loss correctly, maybe beneath the low of consolidation somewhere. But that was Google last week. Really good move. Last week, we said to go long on Boeing over $220 a share. Well, Boeing did the deal. Boeing went as high as $243 a share, over 23 points in the money. And Boeing, as you know earlier, we had to stop out earlier in the week because we were just a little bit early, but we were able to add back in and make some really good money once Boeing started taking out these highs. So Boeing, a little bit up there. We're looking for a little bit of a dip buy, maybe at the 223.50 area, and then a bounce. But otherwise, if you're a breakout trader and you like the breakouts, you can take it over 235 or 236 on Boeing. Not in this week's game plan, but I'm still ride it if you're still long, but look for a new entry with a little bit less risk than earlier because the big move has already happened. So now it has less juice than it did have before. The only dud from last week's game plan was Amazon. We said to go long on Amazon over 3,200 and to target the 3,300. Well, if you went long on Amazon over 3,200, we went as high as 3,245, but then sold off. So you got $45 in the money. And then after that, you could have taken a break-even stop or a smaller stop loss than you originally had. But Amazon, kind of still consolidating. We're waiting for this apex to break out. Still bullish on Amazon long term. In last week's game plan, we said to go long on Spotify over 280. Take a look at the weekly chart. We have a weekly bull flag. We had first this bull flag that popped bullish over about $200 a share, let's say, if we go to the right. But we got this nice wide megaphone type consolidation pattern. Well, we started to head towards the upper end of the megaphone after, you know, putting in higher low pivots. That's a super bullish pattern. We said to go long on Spotify over 280 and just look at this breakout. Just straight up, one pullback resting day. That's an inside day. That's why I was not worried about my positions on that day. They were down slightly, but it's just an inside day, and boom, we got this massive breakout. We probably should have added over 293, but we got that breakout, especially over 300. On Spotify, we turned $80 into about $700 just through options and call spreads. So that's kind of how we do it in Weenie Trades, keeping the risk in the spread and the call spread. And boy, was Spotify a really good mover. Not in this week's game plan. If you're long, you can still ride it. Maybe you can have a stop beneath 313.50. But that was Spotify last week. Massive breakout. These are the stocks that we need to size up on and really hold through. Those can make your months and your years of profitability on just a few small trades like this. So now that we talked about last week's game plan, let's talk about stocks setting up this week. This week, we're watching Tesla. I have these charts over here because that's some of my positions. Be sure to check out the the official debit spreads video on Weenie Trades. But Tesla, we're looking to go long over $600 a share. We're looking for the breakout. I don't think the breakout's going to be as big as this breakout over here from 500 to 607, but it can get some legs. I'm targeting the 620 area on Tesla this week, so long over 600. Stop will have to be beneath 590. If Tesla's coming underneath 590, it might just need more time to consolidate. First dip buy would be 570, then the next dip buy would be around 560, 565 area. So watch for that. But otherwise, Tesla, we're looking to catch the breakout and add to it with a debit spread or two if we break that $600 a share level. Targeting the 620, but Tesla could probably go as high as 650 this week. On Friday last week, Fastly had some news about talks with Cisco. I'm not sure exactly the news, but it definitely has a technical catalyst. We went sideways for a bit, and now we're popping, and now we're starting to backtest the old breakout area. So we're looking to see if Fastly can have some continuation. It was in the game plan a few weeks ago to go long over $100 or over $95 a share, and boy, Fastly went as high as $136. So this week, we're looking to go long on Fastly over $90 a share. Our stop is going to have to be pretty wide, about 87.30, 87.29, maybe if you want to give it a few more wicks, maybe underneath 86.74. But FSLY, it's definitely a fast mover, so be sure to share size appropriately or to use your option contracts with a little bit of caution because it's a fast mover, Fastly. And we're just going to be targeting firstly about the 98.60 level, but then if it can get above there, it should bust 100 and maybe go as high as 102.13 this week on FSLY. Target is in this week's game plan because it's got a perfect candidate as a bull pullback scenario. Look how we moved up from the highs and then we slowly sold off, each with lower wicks. That means this is a nice controlled sell-off. Now we're starting to see a hammer candle, and the entry trigger could happen on Monday if Target starts coming above 175 and can close hourly above it. Then we should pop, and we're just going to be targeting about the 177.50 area, maybe 178, maybe as high as 180, but if it's getting to 180, it's probably going to bust the all-time highs of 181. We're bullish Target long-term, like the $200 a share. If you do decide to take that 175 break, you're going to have to probably put your stop underneath 173.44. That's where I would have my stop. So that's Target this week. We mentioned that this week we're looking for a neutral SPY, meaning some sideways chop shop, maybe a little bit bearish on the SPY, but we are bullish tech. The QQQ is breaking out, and AMD is going to be a part of that, and AMD is my favorite candidate for continuation this week. AMD just made a new all-time high. Something about news with Amazon using their microchips, which is great news. AMD, I'm looking to go long. Early confirmation over 94.62, but really I'm going to be adding over 95, and we're going to be targeting past the all-time highs. I don't think 96.37 is the top for AMD. It's definitely going to want to push towards that 100, and I'm going to be coming out, peeling off profits in the 98, 99, 95, 99.50 area this week on AMD. Stop is going to have to be beneath Friday's low, maybe 92.49. If you want a little bit of a tighter stop, you can go as tight as 93.74, but that's AMD this week. This week, we actually have a stock that I'm looking to potentially short this week just due to the size and magnitude of the drop. That's definitely going to cause some fear in investors when a stock drops 24%, and Splunk, SPLK, could be that candidate to be a short. I normally don't short. I haven't been shorting lately because the market's been so bullish. Why would I be shorting if the market's so bullish? So we're also really good at going long stocks. But if you're looking for a hedge maybe, or just, some practice or downside exposure, SPLK could be the stock to short for you underneath 160. And our stop is going to have to be about 164, 165. But we can probably target probably beneath this low of 152, but maybe as low as 150 on SPLK, maybe just a spike through. If you want to go for a stretch target, 145, 144 area on SPLK. So that kind of wraps up this week's game plan. We had a really great last week. The game plan is, I usually don't try to talk about it too much because I give it in the YouTube videos here. So be sure to ask questions. You can ask me about any of these on Weenie Trades Live. But boy, last week was a really explosive week. You just needed to load up the boat on those and then, sell. But, this isn't financial advice. I mean, the stocks can do anything and sometimes they will do anything. So you need to manage your own risk. This is just what I'm doing, not financial advice. And with that said, let's have another amazing week. See ya.